You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right. Hi, everyone, and welcome back again. And hello to all the LCMS Traders Club members as well who are joining the live call as well right now. Thank you again for coming in and getting your insights as well from the team here at LCMS Traders. So, everyone, this is episode 409, and it is the 2nd of November, 2021. And if you are new to the club and you're watching this live call, if you're watching the recording on YouTube as well, a quick introduction. We do this currency call every Monday to Friday at 11 a.m. GMT +8. It's live only for the LCMS Traders Club members as well. So make sure you do hit the link in the description section of the YouTube channel and you'll be able to get into the club. So we start the week with Mondays, obviously, with the Aussie and Kiwi. Tuesday, we do the Euro pairs. Wednesday, the pound. Thursday, yen and gold. And on Friday, we do the CAD and crypto. And in this currency call, you will receive the market economic updates, the key support and resistance levels, trade ideas, and you'll also get much more, including the fundamental breaking news analysis as well, presented by Kim Hong as well. And there's quite a lot happening this week as well. So it's very relevant to be getting onto the calls for the live call as you are an LCMS Traders Club member. So thank you for that. And this currency call will obviously be very beneficial to both long-term investors and the short-term traders too. And we will go through what could move prices, the possible trade ideas, and we'll also highlight the possible and potential targets and risks as well of the trade. Finally, and important point to make clear, this is a disclaimer. So any information shared during this session is not intended to be a trade recommendation. It is simply and solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. All right, everyone. So just to start off today, we do have Kim Hong, currency strategist at LCMS Traders, and he'll be going through the FOMC meeting coming up on very early Thursday morning. So over to you now, Gimme.
All right, thank you, Scott. Yes, very good. The meeting that we have all been waiting for, the FOMC meeting this Thursday at 0200 GMT +8. Now, why do I say that this is the meeting that we are waiting for? Because we can expect a tapering announcement from the Fed, all right? Now, recall that from the previous meeting back in September, right? September. Okay. The central bank actually mentioned that, if the progress of the whole economic recovery is, well, specifically the jobs market and the price stability, okay, which we know they are referring to inflation, all right? If both factors are actually progressing, broadly as expected, then the central bank actually felt that it's probably time to actually carry out a moderation of the pace of assets purchase, basically tapering of the QE. All right. So from the dot plot, okay, that was released, there was also a revision, okay, a carry forward in the timeline for the first rate hike to take place. Okay, so all in all, it was quite positive, okay, previous meeting, all right? And then comes the September's jobs report, okay, which was released in the first, well, I think it was the second Friday of October, okay? And then there was this very disappointing figure of 149,000 jobs being added for the month of September, all right? And then at that point of time, the market was actually wondering, how will this disappointing figure impact the Fed's decision, okay, on whether or not to carry out a tapering this time around in November, all right? So fortunately, okay, later on in the month, in October, Jerome Powell said in a speech that you know what, it's time to taper. All right. So I think the message is quite clear that you know, the previous supposedly poor, disappointing jobs report, okay, met the substantial further progress that Jerome Powell, you know, is expecting. Okay, so that's good. All right, it's good. At least right now we can expect, you know, a tapering from the Fed this coming Thursday. Okay, yep. So we can expect a tapering coming from them. As to the rate that they will be tapering, all right. Well, there are some speculations that say $10 billion per month. There are some that says 15. Personally, I feel that $15 billion per month of tapering is a more realistic figure. All right. Okay. So from now until mid of June, sorry, from now until mid of 2022, okay, which I would say is June, okay, June 2022, there are actually 8 months. All right. So if we do a quick math, all right, a $15 billion per month tapering, okay, for 8 months will lead to $120 billion, which is the total amount of, well, QE that the Fed is currently carrying out on a monthly basis. Okay, so again, recall that, you know, during the most recent meeting, or rather, should I say, the most recent speech by Powell, okay, he actually mentioned that the central bank is actually expecting QE to be tapered, okay, to come to a halt by mid of 2022. All right. So you see that, you know, what they expect and the simple math that I just did, you know, just now, it all tallies up. All right. Of course, mid 2022 can be May, can be, you know, July, you know, it's like a plus minus 1 month from June 2022, right? But on average, you know, if they were to carry out a tapering of $15 billion per month, then, you know, by mid 2022, we can expect the whole QE to come to an end. All right. So yeah, that's, you know, it's probably ranged from like $10 to $20 billion per month kind of tapering. So, you know, we are just here, you know, hear from them on what the figure is going to be like. Okay, so take note that there will also be a press conference, all right, at 02:30 GMT plus 8. Okay, so yeah, what to expect from the press conference. Okay, so Jerome Powell, okay, personally I feel that he's probably going to just reiterate that, you know, the start of tapering, okay, if they were to going to carry out tapering this time around, okay, then Jerome Powell is likely going to say that, you know, this whole the start of tapering does not imply that interest rate hike is coming. Okay, to be honest, I'm not sure about you guys, but I think it's quite obvious, okay, that if the, you know, as soon as tapering starts, we can pretty much be sure that the next thing that comes is interest rate hike. Okay, it's just a matter of time. All right, as long as, you know, at least for the US central bank, okay, the Federal Reserve, as long as tapering, you know, were to get started, all right, then we can look forward to an interest rate hike. So, you know, if they're not going to taper QE anytime soon, then of course there's no chance, 0% chance that we are going to see a interest rate hike, right? So I think what Jerome Powell is trying to do, you know, for the past few months, okay, over here, by saying that, by emphasizing that the start of QE does not imply rate hike, is just, you know, he's just trying to calm the market down. You know, you just don't want the whole market to go like, wow, you know, there's a tapering coming, or, you know, the Fed has started tapering, so we can expect interest rate hike to come soon, okay, which we do, but he doesn't want us to have this, to adopt this mindset, okay, because people will be, you know, buying US dollar, you know, fanatically and things like that, and then causing, you know, some chaos in the market and so on and so forth, right? But of course, you know, in theory, we know that once QE starts, you know, eventually comes to an end, we can expect interest rate to follow up soon after, all right? So yeah, he's going to reiterate this whole point that, you know, tapering does not imply interest rates coming. Now, second point to take note, very important, is that will there be a change in the view that inflation in the United States is transitory? Okay, because, you know, for the past 6 months, we have been hearing from the Fed, hearing from Powell himself, okay, that inflation is transitory, it will you will actually tone down to our 2% target in the long run and things like that. So what we want to pay attention to is, okay, of course, the reporters who will be present, okay, during the press conference will definitely prompt Powell on his view of inflation being transitory, right? So what's the impact going to be? Okay, if he remains, if his view remains that inflation is transitory, then fine, it's okay, it's default. All right. Now, if there is a change in his view that inflation is transitory, okay, meaning to say that is probably going to hint that inflation is no longer transitory as expected by the central bank few months ago, and things like that. Okay, if there's a change in view, then I think personally my interpretation of that is that we can really be expecting an interest rate hike to come soon. Okay, and what impact does it have on the US dollar? It's likely going to strengthen the US dollar. Okay, so coming to the impact on US dollar from the decision that the Fed will be making tomorrow is that if the Fed announces a tapering, okay, this is likely going to strengthen the US dollar. Now, what if the Fed decides not to announce tapering? Okay, I think this will be the more fun, I would say, yeah, fun and decision. Okay, more volatile decision, because it's widely expected that the central bank will be tapering. Okay, now I've said this a couple of times already. What moves the price is surprise. Okay, if the market were to receive any surprise, unexpected surprise or decision or announcement coming from the central banks, any central bank, all right, then chances are we're going to see crazy movements in prices. Okay, so with the market's expectation that the central bank will be carrying out a tapering this Thursday, okay, and if the Fed decides not to announce tapering, then this is actually, I would say, quite a big surprise. Okay, that will likely, okay, be weakening the US dollar. All right, and then of course, if Jerome Powell were to say that, oh yeah, our view on inflation is not, it's not as temporary as we previously expected, hence, we felt that inflation is no longer transitory, all right, as previously expected, then, we are likely going to see a strengthening in the US dollar. Okay, so all in all, I wouldn't want to say that I encourage you guys to trade during the FOMC because it's really very, very volatile. Okay, and personally, I feel that trading the monetary policy meetings, okay, when there's actually decisions to be made, okay, decisions to be expected, prices go all over the place, and it can really, I don't know, review your true character. Okay, like for example, personally, I've traded before FOMC, BOE, all sorts of major central banks meetings and things like that. Yeah, that is when you really, discover your own true character. Okay, say for example, for me personally, I traded several times, and for the first few trades, I made losses, and then I tell myself, you know what, that's it. I made a couple of losses. I decided to just end for the night, end for the evening, end for the day, and things like that. All right. But, when you start seeing prices move up and down, somehow that the devil part of you, okay, will tell you that, you know what, you can actually recoup your losses. All right. You can actually recoup the losses incurred from the previous two trades. Why not do it, right? So you will enter more trades and probably upsize, upsize meaning, your position trade, you may increase from whatever lot size you were trading previously to, I don't know, a higher lot size and things like that, all right? So that can actually, all right, lead to account busting, okay? And not that I've done it before, but trust me, the whole duration that you're trading this high impact monetary policy decision news release, it's more than just a roller coaster ride, okay? It's it can be mind-boggling, and you will feel, you will start having a lot of illusions and things like that. So I wouldn't want to say I recommend you guys to trade the FOMC, but if you guys really want to have a feel of the whole roller coaster ride, or for new traders out there, if you want to feel how this whole news trading, this high adrenaline rush, roller coasting kind of trading feels like, all right, downsize. All right, if you are trading on a $1,000 account, okay, if you guys are trading like 0.5 micro lots or 1 mini lot, then downsize to the smallest you can. If you're trading on MT4, the smallest size you can go is probably like 1 micro lot, which is 0.01 lot. All right, I repeat, 0.01 lot. Okay, make sure that you set that to your default lot size, okay, before using the shortcut key, alternate key, or whatever you call it, okay, so that you can trade right away and with just one click and things like that. Yeah, you don't want to be at a usual lot size when you're trading FOMC this time around. Okay, just downsize, and yeah, remember to set stop loss, have a feel of how it's like, and yeah, we'll see how it goes. Okay, so yeah, if you guys are trading, if you guys want to trade, look for trade opportunities, okay, then this time around the FOMC will definitely present quite a lot of trading opportunities. Okay, and also pay attention that the RBA will be announcing their monetary policy decision at 11:30. So unlike the FOMC, yeah, personally, I don't recommend you guys to trade the RBA this time around, okay? Because no change in monetary policy is expected, and there's this whole yield curve control thing that the market is speculating that the RBA may be dropping, and things like that. So it's a bit. It will take a while to digest the information, all right? And during news trading, you don't really want to spend too much time reading, but in this specific scenario for the RBA this time around, you really need to know what is going on, what the heck the RBA is doing or will be doing before entering the market, which will take a lot of time. All right. So personally, I would say stay out of the RBA coming in at, I don't know, 11:30 GMT plus 8, 11 minutes time. And yeah, if you want to look for trade opportunities, you can try it from the FOMC, the upcoming BOE, and of course, the famous NFP that will be released this Friday. Okay, so with that, I'll see you guys tomorrow. I'll update you guys again on what goes down on the RBA, and I'll prep you guys on the BOE as well. Okay, and do I have any questions? Seems like the chat is active. Blah 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 blah.
So
Melbourne Cup.
With the tapering coming from the FOMC, we're going to see dollar strength go raging across the board.
Likely the case. Okay. Yes. Although we can expect a strengthening of the US dollar, okay, if we are going to see a tapering announcement from the Fed, okay, I would say, trade what you see. Okay. Why is that the case? It may be the case that it has already been priced in. Okay, that's a very, I would say, anticlimax thing to say. After giving you guys so much hope that a tapering is coming. If they are going to taper, then US dollar is going to strengthen. And if they were to disappoint the market by saying that we are not going to taper, then there will be a weakening in the US dollar. Everything seems straightforward, all right, except it's not, because there is always a possibility that the market has already priced in a tapering coming from the Fed. All right. Now, given that, okay, suppose the market has already priced in, okay, factored in, expect that the central bank will be tapering. So end of last month, there may already be US dollar strengthening against the major currencies across the board, right? But if this time around, okay, the central bank were not to taper, that will further increase the level of disappointment, okay, that the market is going to have on the Federal Reserve, okay, because they already priced in a tapering. And then now you're telling me that, you know what, we are not going to taper this time around. Okay, maybe next month, maybe the month after next, all right? Imagine how it's going to feel like, okay? Imagine how the market is going to feel like. So personally, yeah, just pay attention to whether or not they taper, and most importantly, see how the charts react, okay? Like what Gene always do, okay, prior to any central bank meeting or NFP or OPEC and things like that, he will actually, filter out pairs to trade, okay? And not trade all 28 major and minor pairs, okay? He will filter out the pairs that, he wants to trade, okay? He feels that has the highest chance of making money, okay? Or rather, should I say, making a clear direction, clear move, then he will focus on that one or at most two pairs, okay? Because during high impact news, you have no time to click, set TP, set stop loss and things like that for like 3, 4, 5, 6 pairs and things like that. You are not a robot, all right? You are human. So, always filter out the pair, maybe dollar yen, maybe euro dollar. And also, a pro tip, okay, during high impact news, expect spread to widen, okay? Expect the spread to widen. So, okay, what does that mean, right? So during high impact news like FOMC, it affects the US dollar directly, okay? So, there's chances are there's going to be a widening in spread in the pound dollar, okay? We all know that pound dollar moves like nobody's business, cable and things like that, right? So personally, okay, if you want to trade, I would look at dollar yen and euro dollar, okay? Because both pairs have the lowest spread across many brokers, across probably the brokers around the world, because they are the two most liquid pairs being traded in the Forex market, okay? So with that, with the tons of orders, liquidity coming in, we can actually expect the spread, okay, to widen slightly, but not like, to 1 pip, 2 pips and things like that. And of course, when you're trading news, high impact news, chances are you will be scalping, okay? And the best market condition that a scalper can have is very, very, very narrow spread and not a wide spread, okay? So yeah, first thing first, if you are to trade, look at the news when it releases. Second thing, okay, sorry, the first thing to do, decide on what pair you want to trade, okay? Lock on to that pair and don't look at other charts anymore, all right? Second thing, when the news is released, focus on the news. Third thing, just trade on that 1 or maximum 2 pairs, okay? If you can trade on demo, that'll be better, okay? All right? So with that, okay, I don't see any questions. 7 minutes to RBA release. Yeah, it's 6 right now. Okay, I'll hand it back to Scott.
All right, thanks, Gimme, for that. And I'll go straight into the US dollar chart here as well, because we do have that release coming up soon as well, guys. So what I've got here now, just quickly on the daily chart with Samtrade here, you can see that we are right in the middle of this range that's formed. And we did see a slight pullback as well. If we go down to the 4 hour, so we were testing 94, we've pulled back a little bit, and now we're pretty just sideways currently. We've got the 1 hour candle, and we did have a slight gap up, very slight though. So the next point of interest is going to be that 94, but like Gim's discussed as well with the FOMC coming up as well, that's really the next one. And then we've got NFP at the end of the week. So if I go quickly to the calendar now as well with Forex Trading Asia, and you'll be able to see that for today, in fact, there's not a lot of US news at all. So what that really could mean is that there's some opportunities where the other pairs are definitely in focus. Yesterday, we had a little bit of news come out for ISM manufacturing. Everything was, not dramatic though. And as you could see, the US dollar did pull back a little bit. I want to touch upon one more thing. We've got 4 minutes to the release as well. And again, like you mentioned, guys, please be cautious if you're trading, especially this week. It's very dynamic in regards to all the news that's coming out as well. So what I'm going to do here is I'll just quickly bring this up. So I've got the reverse repo rate. Now, what this is, it shows in a graphical sense, the situation here is that, so if you have a large institution, you can essentially have your money overnight in the Federal Reserve is actually allowing a temporary open market operation to occur. And as you can see, the more that's present there, the more money is on the sidelines. So what it is indicating is that something significant is going to happen in regards to, and I want to zoom in here a little bit as well, just to give you the significance of this as well. So this is in the contracts are billion per size. So we're in the trillions here. And what it's indicating is that a lot of institutions have this arrangement where they will be able to park their money overnight and it's protected. So they don't have to be fully involved in equity markets, crypto, wherever it is. And it's just indicating there's a lot of concern by the biggest participants in the market. And as you can see, this goes back, I mean, this was the 2008 situation. So there's a lot more market that's, present here. And you can see Tesla hit 1200 as well. So, which is crazy, considering the profitability that it has and everything like that. So from my perspective, guys, stay cautious. This is a really strong indicator of inflation as well. So be mindful of that, stay really cautious. And some conclusion points would be for the US dollar index itself, very stagnant, you'd expect for today as well. So if you're focused on, for example, the Aussie dollar with a decent catalyst coming out, the market really has run with this stronger inflation. So it's going to be interesting to see how it does respond as well. But we do have the euro in focus as well for today with Jin. And obviously in the background, maybe the Aussie dollar charts up as well, but we'll see what happens. So over to you now, Jin.
All right, thanks for that, Scott. 2 minutes to the RBA news release, interest rate decision and rate statement. What I'm going to try and do now for the next 2 minutes or next 1 minute is to fill up, to do a bit of a filler so that we can look at the Aussie news release together. With the FOMC to be released on Thursday morning. So club members, we do have our live trading session on Wednesday night. What I also will be doing, like Kim Hong was mentioning, I will be doing a quick analysis or possibly a video on that, on some trade setups that you could be looking at. For those of you who are trading or who are in our time zone where it'll be a 2 a.m. news for you, what we always suggest is don't trade it. I will be identifying possibly some trade ideas, some trade setups that you could set either a buy or a sell order and then leave it, have a size down, have a tight stop loss, and then set it and forget, see what happens the next morning. So that might be something that you can look into. So with that, wasted 1 minute. Now we are looking at the news here, the rates decision. You can see that they have maintained rates at 10 basis points. They have continued to purchase at a rate of 4 billion a week. They will discontinue the target for the April government bond. So no changes there from the RBA, with rates picking up still low at a 2.1%. So you see that the RBA has disappointed the market a little bit with no action, no commentaries about further actions as well. So they will not increase the cash rate until inflation is 2 to 3%. And yeah, so they actually sound a little bit dovish. They haven't looked at doing too much. They are happy with the exchange rate, remains within the range of the past years. And the main thing is those 3 points, those 2 points actually, keeping rates and also to continue the purchase at 4 billion a week. Gibong, anything to add on the RBA?
I'm actually very curious about the third point, discontinue the target of 10 basis points for the April 2024 Australian government bond, because that sounds like it has some relation to what the RBA has just carried out recently, I think back in 22nd of October, when they purchased 1 billion Australian dollars worth of government bonds. So I'm not very sure about that, whether or not they actually provide more details in the statement. We may have to wait for the minutes for more details about that. So meanwhile, I'll just try to look for any information on that, whether or not they provide, and then I'll update you guys again tomorrow.
Okay, cool. So in general, what we're looking at is, when you look at the charts here, no rate changes, no intention to change rates, no no tapering. They're going to continue whatever they're doing until Feb 2022, and then a possible discontinuation of the 10 basis points target for the April 2024 bond, which we have seen, not surprising, no actions coming from the RBA. We saw that the weakening in the Aussie dollar here testing below that 7.5 level. So it hasn't done that as expected. At this point, you could even be looking to see whether this will close below 7.5 with this disappointment and the possible dollar strength with the FOMC coming up on Thursday morning. We could be looking at a slight, I don't think it'll come all the way back down. I don't think it'll be all a big retrace. I think we might see that slight adjustment back down again, but see what happens here, because it is reacting to the same level that it did yesterday before bouncing back up. So I think the market had been pricing in, as much as we anticipated this to be not a big price mover news, some levels of the market have been anticipating some action from the RBA. This could be just a move down as they close off their speculative positions. So just as expected, not a big move there, only a 30 pip move. So not a big move there from the RBA at this point. Wait and see what's going to happen at this 75 level. So with that said, coming back to the currency in focus, the euro dollar sitting also at a key level 1.16. What could happen at this point? Checking back on the news here with Forex Trading Asia economic calendar, we just had the RBA's decision and statement. For the rest of the day, we do have manufacturing PMI numbers to be released from the Eurozone. Individual countries looking like it's no change. Eurozone as a whole, also no change. So I don't think this will influence prices too much in terms of the manufacturing PMI. On Wednesday, we do have the Eurozone unemployment rate, despite it looking to drop from a 7.5 to a 7.4. Unemployment numbers for the Eurozone does not usually affect the prices, but we could be looking at the ADP non-farm employment change from the US, possibly affecting the euro dollar a little bit, as we could see some dollar strength come into play, together with the FOMC statement, press conference, and rate decision. As Kim Hong was sharing, it's just popped off. And then services PMI for individual countries for the euro. Again, you can see not a big change. We're looking at some drop in services, but as an overall services PMI looking at that 54.7. Again, no change. So we're looking at some relatively stable data coming from the Eurozone. With that in mind, the main focus or the main influence we could have on the euro dollar would be the US dollar strength or weakness coming from the FOMC and the non-farm payrolls on Friday, with the number looking to go from a 194 to a 450K. At this point, we do think that we might see a strong number from non-farm payrolls, with unemployment rate possibly going from a 4.8 to a 4.7. So all that coming back to the charts, what it could mean is that the euro dollar, I believe, I would like to say that the selling opportunity is going to be more attractive. The selling opportunity on the euro dollar is going to be more attractive, but because it is at that 1.16 level, and also because there's going to be a couple more days before the FOMC and non-farm payrolls, what I think is likely to happen at this point is for the euro dollar to sit there, to possibly test a little bit higher, possibly even towards the 1.1620 level. But I would be looking for selling opportunities back down towards that 1.1530. So what you should be looking for, what I would be looking for, is selling opportunities below 1.1590 You could have a 20 pip stop loss for a good 60 pip take profit level, a 1:3 towards the downside for the euro dollar. Depending, this will be quite easy, but it will be driven by the FOMC and the non-farm payrolls. That's why I have it as a turn down later into the week. With the euro dollar possibly turning towards the downside, the euro pound has been tracking higher, being pushed up because of the euro dollar and also because of that downward move in the pound dollar. I think that because that range was very tight or very low and very tight, that pop upwards would identify as a good selling opportunity if it rejects that 8497 level or the 85 level. Look for that rejection, look for that selling opportunity, I would say later into the week. I would say that possibly below 84, be a bit safer and say 8485. 8485, you would have a 20 pip stop loss for a good 60 pip take profit level towards the downside. At this point, because this level is quite near, I would say that if it does break downwards, it would break below this point quite quickly or quite easily and come towards the 8419 level. So you could again be looking at a 20 pip stop loss, 60 pip take profit level, a 1:3 risk reward towards the downside for the euro pound. This is likely to be quite a good move. I would rank this quite highly because what we could see is with the Bank of England news to be released on Thursday as well, if they do vote for a rate increase or they tend towards a rate increase, we could see that move upwards, and with the pound dollar pushing higher, we could see the euro pound track lower. But I'll tell you more about that in detail with the pound dollar tomorrow as we look at it. Aussie dollar has bounced back up towards that 7.5 level, so a lot more patience required if you're looking for any selling opportunities. No surprises coming from the RBA, hence we saw that fluctuation or that volatility on the Aussie dollar. With that, I'll pass it back to you, Scott.
Sorry about that, Jen. All right, I am back, guys. And again, like we've mentioned with trading around news events as well, be cautious. Now's the time as well to, if you obviously you are a club member, if you're watching this right now, feel free to share the link as well to join the club. Get someone involved that's sort of tentatively looking to learn how to trade. And this is the environment you want someone to be in, instead of just saying Google search Forex trading, which is really a recipe, honestly, for disaster, unless you love losing money. So, which hopefully you don't know anyone that does, because that's not really a good trade to have. So get them to join the club, guys. Join us in the chat as well. There's stuff happening. So we look forward to the questions as well. If you see something that looks interesting on the charts, please share it. Feel free to ask questions. And that's it, guys, for Tuesday. Hope to see everyone tomorrow for the pound. And have a great day, everyone. Bye for now.